In today's interest rate markets, let's focus on the 2-year, the shorter end of the curve here as we move through the week. Really, we saw that as the weakest link here, at least to some degree here today. When you look at all the different durations, we're seeing the 2-year down a little bit more than most of the other durations, particularly when you compare it to the 10s and the 30s. So we're seeing some further selling pressure. And really, if you look at the 2-year for the last 5 trading days, it's basically been flat to lower every day. There's one day where it basically closed unchanged, but the other 4 days, we continue to see some selling pressure on the shorter end of the curve. As we move through some of the data points here this week, I think you got to look at some of the driving factors here when you look at not only the trade negotiations continue to unfold, and that's definitely being watched closely by bond traders, but also, you know, we have a lot of data points that the market's contending with. This morning we got some pretty positive news. Small business optimism was much better than expected. Also, we saw unit labor costs reduced lower than expected. So those things, I think, played into the pricing as far as when you saw the short end sell off a little bit more than the longer end. Now tomorrow we got the big data points coming out, CPI, prior to the Fed announcement. So those are the two numbers, two items to be focused on, I believe, tomorrow. And we have had in the background all this week, there has been a pretty sizable bond auction. For the most part, though, it's been managed pretty well. It really hasn't had too much of an impact to this point as far as the intraday volatility within the bond market, as we continue to see the refunding continue, and as far as the government continuing to issue further debt. Looking at some of the other things I think it needs to be focused on, let's look at the yields and kind of the yield spread here as we move through the week. Right now we're seeing the 2-year actually at the higher end of the range. When you look at it, it's right around, I believe it's, what is it, the 1.654 levels. So we're seeing, again, that's the high end of the range for the last month or two. And when you compare it now to the 2-year versus the 10, you are seeing the spread now below 20 basis points, right around 18.5 basis points today. So we are seeing that contracting a little bit here as the market's digesting some of these news items coming out this week. Nothing too pronounced, but we are seeing, again, a little bit of a shifting there. And when you look at the 30-year, actually, you take it all the way out to the 30-year today, we saw that basically flat to up slightly today. So we saw some strength there, yields coming down, or for not too dramatically, but certainly when you look at the curve relative to the different durations, you are seeing the shorter end selling off, the longer end kind of holding up here as the market adjusts, as I mentioned, for some of these data points. And certainly as we move towards the end of the week, without it, if there's no resolution in the trade situation, possibly an extension or whatever might happen there, you are seeing the market kind of bide its time here. And I would suspect if there's a change in expectations, you'll see quite a dramatic move. Volumes have been fairly low to this point, so once again, some clarity will probably set the tone here for the end of the year.